All right. Well, good afternoon, everyone, and welcome once again to the Core Chain webinar series, where blockchain education, where it all starts. Today, we are going to have a great conversation. We have some great guests today joining us. I'm going to let them introduce themselves. But don't forget, with the Core Chain webinar series, you'll be able to still see it on either YouTube or you can go to corechain.io. You'll be able to watch the video and the transcript of this series. And we have many in store for you. Thank you, everyone, for submitting some of the titles that you would like for us to speak with you. Today's topic is really interesting because, in order to talk about blockchain, you really need to first talk about where you're going to put it in. I mean, blockchain is just like one of those great technologies that are useful, but why one particular sector or another? And today's topic is the private capital markets. And the private capital markets is vast, but we're going to get into that. But before we do, let's have our guests today introduce themselves. Jeanette, please.
Thank you so much, Oscar. My name is Jeanette Spalding. I am co-founder of TokenWise, which is a tokenization and growth strategy firm for blockchain companies. And what we do is we really bring together the various participants in the space so that they can execute on strategies that involve asset tokenization, getting into various parts of Web3 and really leveraging blockchain technology. I come from a traditional finance background, so I have a suspicion that is why I have been brought on to be a contributor to this particular webinar. I started my career in Paris working with institutional investors, also worked in London doing the same thing before I made my transition into technology as an operator in the blockchain space, as well as a digital transformation leader and product management leader in various large financial institutions. So very happy to be here and looking forward to discussing private capital markets.
Perfect. And you're right. I mean, you're well suited for this. You've spent enough years in it. It's now time to share.
Right.
As David Wield always reminds me, we have to start at the beginning. And I'm going to share a little tidbit with you guys on this. But as well, I would like for everyone to meet the esteemed Dr. Karan Garimella, please. I don't think we can hear him. I believe it's not working for him. So for all of you, I am sure this has happened to all of your CTOs because it happens to mine every single time. We're in a meeting, and guess what? The microphone doesn't work, the camera doesn't work, and of course, their machines are doing different things. So we're going to come back to him. He's going to introduce himself here shortly. And high level, Dr. Karan Garimella is the Chief Technology Officer and Chief Science Officer, both at Core Chain and CoreConnex. His vast number of years experience working in the sector. Are you able to join us, Graham? Nope. Still out to lunch. Okay, Viva Las Vegas. So you're going to need to figure that out because otherwise, what am I going to do? You're going to hand puppet me in from the back. So one little tidbit that I noticed, and we're going to get into the discussion today, the private capital markets, because it's so important, is that the last week or so, I've been noticing participants, intermediaries, people in our ecosystem, whether technology or private capital markets or anything, everybody is going back to the basics. I found it very interesting that the DC Blockchain Association, which normally does digital assets and stuff like that, their very first event is what is blockchain. And I thought that was, it's reminding me we're going through a reset. And when you go through a reset, and this is why this subject is so timely, you need to revisit things right from the get-go in order to get to why blockchain is so important here. And that'll be our next webinar, but we'll touch on a little bit. So today we're going to talk about the private capital markets and why are we so excited about it? I'm going to share something with everyone really quickly that you probably didn't know. And we have recently learned that the private capital markets represent 70% of the world's GDP. I mean, that's the impact we as privately held companies have on the world. And this is quite powerful information. So it goes to show you the we're not a small piece of pie. In fact, the public companies only represent a very small portion of it, but they get 99% of all the publicity, and the rest of us don't, or the market doesn't. So, but the rest of us are dealing with the what is the private market. But Jeanette, I mean, you've been working in this space, so let's talk first in defining the difference between private markets and public markets in a simplistic way, and then we're going to go into kind of the participants so people can understand who they all are.
Sure. Yeah, happy to kick it off. Well, I mean, a very simple definition of the difference between public markets and private markets are public markets are available to the public to be purchased, to be invested in, et cetera. So, for example, looking at the stock market, when people think of the New York Stock Exchange, for example, that lists publicly traded companies. So that means you have companies where any member of the public can go and they go through a brokerage account, or they now we have more direct methods of investing in public companies as well. But you can go and there is no real barrier to entry, generally, or very few barriers to entry for anyone in the public to go and buy a stock, for example. With private markets, those we're talking about, if we look at companies as an example, companies that do not offer members of the public the ability to invest in their companies, and that's because the owners are private owners. So we have cap tables, which is basically like the record of all of the different investors in a company, that are very small when you're talking about a private market company. And usually, especially with the kinds of private companies that Oscar's talking about, it's often like just the owners themselves, or the owners and the employees working in the company who've been given some incentives, but it's a very restricted audience. And sometimes there's private investors from like the private equity world or the hedge fund world, but in general, the private markets are much more restricted and closed off to the average investor than public markets would be. And because of that as well, when you have a publicly traded company, there's a lot more regulatory scrutiny around how often that publicly traded company reports on things, because really they're accountable to the public in a much stronger way than private markets. So there are a lot more compliance and regulatory burdens on publicly traded companies. So I think there are a lot of differences, but we'll start with those, and maybe I'll hand it off to other folks to kind of continue. I see we have Karan back, so maybe he likes.
I think he is back. Are you back?
Well, I'm back. Can you guys hear me?
Hello, ¿hablas español, señor? No sé, por favor. Yes, please. We hear you.
Oh, you hear me? Okay, good. I kind of wonder what happened. I apologize for that. Hi, I'm Kiran Germala. I'm the chief scientist and CTO for Coreconics. What I found very interesting, besides the fiasco with the technical audio, what I found very interesting in this whole conversation and the way Oscar introduced this is that typically, as technologists, and we always look at the shiny object and say, where can we use this now? Right, I have this brand new shiny hammer, and what nails can I find to hit it? But I think the approach that we have taken in this entire space is that forget the technology for a second, and let's look at what these private capital markets are. I mean, these are a very interesting beast, right? I mean, everyone knows public markets, but what are private capital markets, and what distinguishes them from the public markets, and what can we do to serve this ecosystem much better? So I'm glad we are taking that approach. And then comes the technology, how we do all this with the right tools.
Yeah, but that's a good point. I think we're sometimes forgetting the very basic question we need to ask. And that's why I brought up the point that one of the leading associations that's been doing these summits, it's all about digital assets, that they're going back to the basics on what is this technology, because I think it's getting lost. And the same thing here is, how can we solve a problem if we don't even know what it is yet? Or not, sorry, that's not true. I think people know bits and pieces of it. And I think the analogy that Jeanette provided, both private and public, it's a great framework, high level, private versus public. The higher level is what the contribution privates bring in to all of this. The other element, if we break that down globally, people go, well, that's a big number. Well, I'll just give you the United States. I mean, $3.9 trillion was raised by privately held company. 1.2 trillion was raised by public companies. The data is right there. That's black and white. And that was just last year. So we need to look at that. But to look at that, we now know that some of the differences there. Now let's talk about some of the participants that are involved. From your experience, I'll start this off because to give some, and then Jeanette and Karen, you guys can lead on to it. But the difference in the public and private is one from operational and reporting, from a regulatory and exemptions you can use. From the participants, ironically enough, they're almost all the same. We're dealing with lawyers, auditors, and obviously, Jeanette, you worked on the other side. You've been on the broker-dealer and the investment banking side, which plays on both sides, right?
Yeah, exactly. Plays on both sides, buy side, sell side. I would add to that there is the secondary market platforms as well that are different for private markets versus public markets. Something like I mentioned, the New York Stock Exchange would look very different than an alternative trading system, which is like the venue for trading these sorts of assets on secondary markets. So I'd say looking at, where these things trade, where these assets trade, the public markets and the private markets still do look very different.
Correct. And I mean, Karen, obviously from what we've been working on at CoreConnex and both in CoreChain, you've obviously seen everybody had, I only thought there were only three. I mean, there's obviously a lot more than that, right?
Oh, absolutely. People always think, hey, there's the investor and then there's the issuer or the company, and that's it. Who else can it be, right? But we know, on the public market side, unfortunately, most people who come to this space, they have this background as a reference point with the public markets. And in the public markets, you don't see many of these players, at least not from an investor's standpoint. But in the private markets, there are so many other participants. We have the lawyers. And one of the things we have learned, Oscar, and, I don't know, Janet, if you have seen this too, is that many people think all lawyers are the same. They are not. They have to understand securities. We have seen people who said, hey, my brother-in-law is an IP lawyer, so can we, he has given us some, advice. But no, there's a boatload of difference. And I know we'll talk about, the regulations in a minute later, but lawyers are great. Auditors, there's a whole set of auditors, both the formal third-party independent auditors, but also the regulatory auditors as well. And then you have the banks, and people think bank is a bank, but what we have found is that there are many, many different types of banks. There are different types of risk and underwriting profiles that they deal with, right? And we have the escrow agents. What is their role in this entire ecosystem? That's an important point too. Insurance is another big thing. Then, of course, we have the regulators with different types of regulations. We have the SEC with the FINRA broker-dealer associations and so on, right? And there are broker-dealers. And as we get deeper into this space, it's been a learning experience over the last 5 to 6 years. And I know Oscar has been in this for many, many more years. But, we know that there are various types of broker-dealers. They're all not licensed exactly the same way. And finally, of course, after all these shares and shareholders are done, the raise is done, they're all put on the cap table. And then there's a transfer agent who has to manage the transfers and perform various other activities on behalf of the investors, the shareholders, and the company. So there are so many people, and all of them play a role in this ecosystem, and that's what people forget. I think they're there for various types of operational processes, there are various types of protections, compliance with the regulation, and so on.
You nailed it. I'm sharing an image with everybody because what I find fascinating is that we all look at something only from what we know. and we wonder why sometimes people get into trouble or they stumble into something. And this has been, we've compiled this to show people all the participants in a transaction. That's just to raise capital. People go, what are you talking about? Yes, that's just to raise capital. Those are all the different participants in one way or another. They'll touch it in a light way, whatever. And what they all have in common, they're regulated, and they're all regulated differently. Broker dealers are regulated differently than issuers, than auditors, than lawyers, insurance companies, banks, and so on. So when you're dealing with a mix of regulators and all that, the complexity of a transaction, and yet we account for 70% of the world's GDP. 3.9 trillion was raised in the United States, and we're doing it. Clearly we are, but at the same time, the other part is that it costs us more money in our sector to do it versus the publics. We share the commonality of what we need. It's just the way it's deployed or utilized is very different in the privates versus the public market. So, I find it, again, listening from all of you, as you look at this image, you go, wow, I didn't realize. Yeah, there's verification and not verification, just ID and AML that everybody's familiar with. No, there are certain countries, United States is one of them. The other country is Australia, and there are more coming, where you need a third-party verification needed on the investor to determine whether they are a accredited or high net worth or whatever name they use in that particular country, where, again, that doesn't exist in the public markets. Do you see what I mean? So, but all of these little things, they tie in, and it puts additional strain in how we move things forward in a more efficient way. So you need, in order to solve any problem, you need to know each one of these intimately, in how it will have an effect in a company in order to move forward. So I hope that was useful. I just thought, as you were talking, Karan and Jeanette, I found that to understanding the participants, people go, wait a minute, there's that many. So now we know a little bit of differences. So from your experience, Jeanette, I mean, you've been in the private markets for a while now. You worked on both sides, and now you're an entrepreneur, which is even better because you went from big to mid-size. Now you're an entrepreneur. Where do you personally see some of the issues that private companies face in the private capital market?
Yeah, I think, one of the main issues that private companies face is liquidity. Basically, when they want to raise more money in order to fund certain aspects of their business, their operations, or launching new products or what have you. Obviously, it's a lot more difficult if you are a private company to go out and raise that money. And I think, as we're probably going to talk about, there are a lot of technology solutions now available to kind of overcome those obstacles. But traditionally, it has been very difficult, and it has involved intermediaries like making appeals to private equity firms or venture capital firms and things like that in order to get those, or angel investors, friends and family, just depending on how much money private companies need. There are these sort of echelons of investors that you go and you put together your pitch deck, and then you go out and raise, you do a road show, you go out and raise funds. That was a very sort of like onerous, like time-consuming process that used to take place anytime a private company would need to raise capital. That's one aspect. Another aspect is actually keeping employees incentivized when you offer equity, for example, to your employees as part of their compensation. One of the reasons why we have seen so many of the large tech companies that their main event, there's like this rush to get to the IPO, is because employee incentives are only valuable if you can trade them. And if you have given your employees equity in the company, but your company is private, it's very difficult for your employees to actually make use of any of those shares that they have been allocated. And so that's another thing that private companies face, is that they really need to keep their employees engaged and even help their employees out. So if there is an employee who wants to like use some of their shares to buy a house, right? Usually that involves they have to kind of locate someone who wants to buy their shares, or they can maybe get the company to arrange for like a buyback or something like that. But these are all very one-off cases. There has not really been a systematic way to allow employees themselves to get liquidity from their equity stakes in the companies that they work for.
Yeah, it is pretty interesting when you have a firsthand view what you see, and obviously, Cran, you've seen a lot, haven't you, in the last few years? Probably, I would like, before you start, tell me about how you saw it before you came in, starting CoreConnex with us and CoreChain, to what you know now. What do you think that's been like for you? And what are the issues that you see, the challenges in the private markets?
It's been an eye-opening experience, right? I feel like I've been on the land. I'm a land mammal for many, many years since my birth, right? And now suddenly I'm thrown into the ocean. It's a different medium, and it's 3 times as big. Okay, which is exactly what the planet is, right? And the private capital markets are, almost like 60 to 70% of the world's GDP is from them, which I never realized. It's amazing how vibrant this entire market is. And both from a technology process and, the types of things that you can do in this space it's not just public markets, but it's even more, much, much more than that. Right. So my predominant experience has been, in the financial services industry. I was with GE, as a global CIO for one of their divisions, and it's all in the financial services area too. And I personally have been a trader in various types of markets, including the futures and commodities. And we know that market. I mean, I'm fairly familiar with that market, right? And the tools and the processes that you use there are very, very different. Things are very liquid if you're working in the highly liquid markets. And there's very little friction in many of the things. I mean, you can take out your smartphone and buy a public stock and get a confirmation in 5 seconds flat, right? And what amazed me when you told me that in the private markets, it takes weeks to process any private equity, private transaction like a buy sale. And that after you find your counterparty, whether you're buying or selling, you have to find your counterparty somewhere at the 19th hole on the golf course, for example. And even after that, it takes a long time. So and also the characteristics of the participants we just talked about, they're all very different. The way the large investment banks approach IPOs and the public markets is very different than how the similar institutions, broker dealers on the private side approach, right? They have a different mindset. They have a different, bailiwick on how they do this stuff. So it's very different. And the risks, the regulations, the protections in place, and how people try to circumvent them in some of these public blockchain kinds of activities. I mean, that's been a huge, huge eye opener.
But I mean, are you able? I mean, specifically, some of the things, I know holistically we can see it, but where do you see some of the roadblocks that people don't understand in the private markets? That it's sort of like getting your driver's license. I go, my God, there's got to be a better way of doing this. You got to stand in line there. I already took my picture. Why can't I do it with my phone? Or the way we open bank accounts. In Brazil, 10 years ago, people could pick up their iPhone, look there, and a bank account was open. We're still having to go to the branch. So where do you see some of the issues we're dealing with private markets that those are problems that technology could ultimately relieve those to make it to make the transition much easier for companies?
Yeah. First of all, unlike in the public markets, there's no central place you can go to and say, I'm going to make a trade here, or I'm going to sign up with a broker dealer, brokerage firm here. There's no such central place to do that. And for people who are raising money on the issuer side, they know it's a very streamlined process for them. Way to go IPO, way to list NASDAQ or NYSE or somewhere else, and it's a very familiar path for them. But for issuers in the space, there's really no path on how to raise this money. So really understanding that's been pretty critical. On the investor side, I mean, how do I invest in a private company, right? I had no clue. I mean, I never invested in any private company before, knowing about this space. And until the regulations came up, and we have these, funding portals and all these platforms out there. Before that, there was nothing else out there. So that's been a significant roadblock. So where does technology play a role in all this? Technology can really help in offering a very smooth and frictionless method for normal investors, retail investors, to come in and make an investment, and also to be assured that the entire process and the transactions are safe, they're secure, and they're compliant. These three things, if you forget that, I think there's a whole segment of the population, a minor segment, that forgot or didn't pay too much attention to the safety and security and compliance. And that's the reason why we see so many scams and scandals like the FTX in some of these spaces, right? So I think the big roadblock for most people is got to be, how can I be assured that it's safe? It is still compliant. And if I lose my tokens, if I lose something, is there a recourse, right? Or have I lost it forever? I think being able to assure people of all these things is a fundamental roadblock for adoption here.
Okay. And again, given both your backgrounds and what you guys have been working on the private markets, I concur with both your component, your feedback, and the private markets. I think the challenges it does face overall is that there is two participants, and I think that when you break it down like this, it really, in one end you have the company, a requirement for capital, and then on the other end you have an investor, a requirement to deploy its capital. So those are, and in the middle is the mesh that has been completely dark for us. It's like being blind and trying to get to that investor. And along the way, we keep hearing, you need to follow this rule, you need to do this, you need to do that, you need to do that to wiggle your way through. And through it, you're taking so many different education steps. As we're speaking here, there are people posting, enough is enough. Stop reading what the venture capital are saying. It's time to take control of your capital raising. But how do you take control if you don't know where that is, that unknown? I think this leads to my big foundation, what I believe in. Look, I'm 14 years in. 14 years in, I like that. Celebrating getting involved with the private capital markets with the introduction of the Jobs Act, is that education is going to be the cornerstone to making this even bigger. The mere fact that we now know it represents 70% of the GDP's world GDP, we know it's big. Now, what do we need to do? Unveil it. We need to make it more efficient so it can become even bigger, or more importantly, to allow the ones that are doing it inefficiently, costing them an arm and a leg, can participate more and more often into their companies. Because clearly, private companies, David Weil taught this to me a long time ago, and I've never forgotten this. Public companies do not create jobs. They do not create innovation. They create wealth, money. That's it. Whenever the market is turning, what are they doing right now? Lay off people. Just lay off. Exactly. Why? Because the next quarterly is coming up. Private companies, we create jobs, we create innovation, we build communities, we create wealth as well. It's a combination of all of them, and the evidence is now there. But it is inefficient in some ways. And Jeanette, you brought it up. You brought it up a couple of times because I know you're tickling on it. That's secondary market, and so here we are. We're still trying to get primary completed, but the holy grail is here. Secondary market trading. I mean, so let's go through that a little bit. I mean, with your experience, where do you see that as the path now that is coming for private markets, and how do you see it unfolding? And what sectors do you think will gravitate to it first?
Yeah, I definitely see that unfolding in terms of the interest level of companies that do end up, they're private and they want access to a broader pool of investors, for example. Currently, how that works, like I mentioned, there are alternative trading systems, but it's all done in a very piecemeal fashion. It's still all very fragmented. So I think we're probably going to see a development of more standardization of private market assets on alternative trading systems. So that's kind of like from a technology perspective where I see things going as more and more private market assets are onboarded onto tokenization platforms. We're going to see a standardization as those assets move into secondary markets. And I want to also just ideologically come back to a point that Oscar, you just made, which is the idea that with public companies, they are not really aligned with the employees, with the overall long-term objectives of a company. Oftentimes, those are out of sync with the objectives of a market, because public markets are very short-term thinking. They're always thinking about the next quarter, the next earnings report, and it's really up to the management of a publicly traded company to act in the best interests of the shareholders. That's basically like their fiduciary duty, and all of that is that they really have to be looking in terms of what's going to make the earnings, what's going to allow us to meet our earnings projection for the next quarter, and then the next quarter, and then the next quarter, which means that they are trapped in this cycle of short-term thinking. And of course, the best CEOs try to break out of that and do try to maintain long-term objectives despite the pressure to align with the short-term thinking. But it's difficult, and it's always a balancing act, and it's really hard to get that balancing act right. Whereas with private markets, you are basically mitigating that short-termism, that short-term thinking, those requirements to focus on the short term. And you really, the leaders and management of private companies that can stay private, they are able to align their strategic objectives and their implementation with what's truly best for their company, what's truly best for their employees, and they can basically get a little bit of trust back from their circle of investors that believe in them as leaders, that, the journey towards success is going to have its ups and downs. Of course, it always does. But trust me as a leader, and we are going to ultimately make it to the long-term objective. Whereas publicly traded companies don't have the luxury of being able to say that, because they have their quarterly earnings report that they have to live up to every quarter. So I would say, as we are seeing more from private markets in terms of private markets that are actually available as investments beyond what's traditionally been available, as we see tokenized private markets, we are going to allow investors to actually invest in companies that do align with that long-term thinking, which ultimately is better for global growth, is to allow for those kinds of strategic actions and thoughts.
And Karan, we've been involved in many discussion partnerships and all that with secondary market trading, and we obviously, like Jeanette, we see it coming as well. From your point of view, based from where you came from and now with secondary, where do you see it? How does that evolve, and which sector do you think is going to be the one that's going to kick us off to getting everyone in mainstream?
Well, I don't know which sector it might happen, because that's like, trying to predict the future, right?
Come on, we can do that.
Well, but the main thing here really is that we need a lot of liquidity in the secondary markets. Otherwise, that's not going to work, right? There has to be a base of lots of investors out there. So if I'm today investing in private markets, one thing that Janet, that you said is really critical in the dynamics of how people invest and why they look to a secondary market in this space, is because on the public markets, right, they're only there to make the money. They really don't care so much about it. And most of that trading on the public markets is really program trading. It's all algorithmic driven trading, right? So they really don't care. The company could have been, making sawdust for all they care. And can I make money? And that's it. Who is a bigger fool in this, right? That's the thing. But what I'm seeing in the secondary markets and the way we see investors and shareholders in some of our issuers is that they're very tied in with the concept of the community. What is it that they're trying to do? And here is other interesting dynamic, right? Any large public company CEO, they don't know who I am. I invest in that company. They don't know my name from Adam. The shares are held in a street name at the broker, right? So as far as I'm concerned, my privacy is highly maintained as far as a public company is concerned. But in the private company, the CEO knows their shareholders pretty intimately, right? They talk to them. So it's very ironic that in the public markets, the shareholders are almost private, but in the private markets, the shareholders are more public. They are known to many more of the participants there, right? So it's pretty interesting how the dynamic works. So,
but that was done on purpose. But that was done on purpose by the very market to separate the investor, to create this kind of line item to say, you know what, we won't show your name, so they will manage that for you. And at that moment, you gave up your right. In a private company, the investor sits directly on the cap table. So you're right, the CEO, the CFO, board of directors, hey, Karan Garimella, Jeanette Spalding, they own shares in my company. There it is.
That's right. That's right. So that's one-to-one connection there is much more easier, I think, in the private markets, and that's that's what gets a lot of the people going. I mean, I've talked to many like-minded investors in this space, and they say, no, I want to get involved in sustainability. I want to get involved in cannabis. I believe in that sector. I believe in entertainment. I believe in something, right? Energy, ESG type of companies. And I think we're going to see a lot of traction in especially in those companies. And there could be in different industries. But the key characteristic that I see is that it's something that they can emotionally be involved in, right? Rather than, some big company out there, like in the public market, I don't know what's going to happen to them. My mutual fund invests in them. My index fund invests in it. My pension fund invests in it, but I don't do that. I have no emotional connectivity to that, right?
Yeah, it's, some people are using words like affinity or a connection
exactly.
to the company. People want things to matter. They want to be heard. They want to be seen. They want to feel joy, proud. I mean, we have a client called Brewdog. I find it extremely fascinating that so their shareholders in their company, they call them punks. So this is a in our company we call them gladiators. Everybody's got, and the punks are engaged in a way that you go, wait a minute, that's sort of like you engaging with ambassadors, and they go, that's exactly what they are. Exactly. They want to participate with us. They're our brand ambassadors. They're the ones who do the first tasting of our products. They come up with the ideas, and they carry badges of honor. And I didn't know what that meant until they started sending me pictures. There are people who go from location to location to get a badge to say I was here. And I'm not only am I a shareholder, I am a punk. And it's kind of sound funny the way it says that, but you're a British company that came up with this. And why it's so significant for a company like Brewdog is that 6 years ago, it was just another microbrewery. Right. In London, England, where if anybody's ever been there, every pub is a microbrewery. Okay. It decided to use the Jobs Act Regulation A+, to raise its capital from the general public, and it's become the success story of the world. And today, it's got shareholders from 86 countries around the world. It's a phenomenal story, but it goes back to the early teachings that the book that I wrote way back, oh my goodness, 8 years ago, when we were talking about, in a private company, why not treat these individuals called shareholders? Why don't we treat them as stakeholders, as brand ambassadors, our customers? Would you treat them differently as a public company? I mean, that's a distinction both of you have made here. Absolutely. You brought it up, Jeanette, from alignment for employee to shareholders. Karan, you brought it up from the management team, the board of directors, to knowing to not knowing. These are big differences. So those are tangible components. I want to share a slide with both of you because this is part of the second part of it where that I want to be able to go through with you is distinguishing the two markets, because throughout this discussion, I'm sure the audience is sitting there saying, I'm really struggling with this difference between the privates and the publics. And I commend you. I understand what you mean. And unless you come from the markets, it is a vast market. There's a lot of participants inside of it. But more importantly, there are some things that you need to understand of each and why one works better than the other. So I'm going to give you this quick analogy for everyone to understand what it is. The one thing that people don't realize is that when you think of the public markets today, I can tell all of you today that are listening in, go to your mobile app or go to your computer. I don't care what you use, Google, Yahoo, AOL, whatever app. And if I tell you to look for the Tesla stock, that's exactly what you're going to get. All of you around the world, no matter what country, you're all going to get that same information. And some say, hey, the reason we get that is because of the internet. The internet is a delivery vehicle only. This was already in place even before the internet. And what is that? The public markets are on a framework or an infrastructure that everybody sits on. The brokers, the transfer agents, the stock exchanges, the traders, online, everybody that needs to transact is there. Nothing moves, even the news wires. That's right, the news. It's not magic that the news all of a sudden show up on Yahoo with that stock symbol and you got real-time stats. That's not magic. That's not the internet. That's the infrastructure. So when we look at the privates and we want to be private and not be like public companies as we are all alluding to, we need to look at it. What is distinctively different? We're using the same type of participants. So what makes it, where are the challenges? And the challenges are that it is larger. So in the public markets in the whole world, there's 100,000 companies. That's it. That's the infrastructure that it supports. It's not a magic number. For whatever reason, it has not exceeded 100,000 companies in the last 30 years. In the private markets today, there is roughly 400 million plus companies around the world, 32 million just in the United States alone. And yet it operates with no infrastructure. Everyone's disconnected. Everyone's niche. Everyone's building their own brand. Yet they all need to transact this very same way as public markets. And that's the reason why we have somewhat of a disconnect with matching people to capital, or not matching, I should say, connecting and doing it in a more cost-efficient way so the private markets can even be greater than 3.29 trillion. I think there's more capital that wants to deploy here, but the inefficiencies of it are the reason. And I share that because we're going to get into the next discussion point here as I take all the points all of you've said, and it comes down to those things. And the broker dealers are not all integrated as they are in public market. In privates, they're all running their own systems, email, maybe they're using HubSpot and so on. Mm-hmm. The companies, the way they manage themselves, same thing. So that fragmentation provides an opportunity. So why is that opportunity important? Because now what we're going to talk about is, because I want to lead it, I'm not going to go full into it. It's a question each of you need to think about. So eeny, miny, mo, I think I will go with. So see, I like to have fun. Do you believe, and based on the discussion we're having, that blockchain can have either a revolutionizing them, or is it going to be more of a transformation? And if it is, how big do you think it can be for the market? Jeanette, I'll start with you, and then Karan, because Jeanette, you've been coming at it from a high level, and you've been grinding it down here. And this is an important question because we've described the market, the problem, the participants. Now, how does this technology potentially have that impact?
So I think I'm probably going to cheat a little bit and say it's both. It's both transformative and revolutionary, because it's really about who is using the tool. So for incumbents like financial institutions, they are going to use this tool in a transformative way, because they, as we speak, they're building their own platforms to take advantage of these types of assets, of these types of markets, et cetera, et cetera. So, and of course, they are not going to do that in a way that strays very far from their current business models. So the types of blockchain and tokenization systems that are being built by large financial institutions are going to look very much like what the current financial markets look like. And that will still be transformative, because they're still going to be able to streamline their operations and therefore cut costs, and probably, how what it looks like to actually trade a stock in 10 years is going to look vastly different in 10 years than what it looks like today, I believe, due to blockchain technology. But a lot of that is basically using the technology to improve how the current financial markets run. That's transformative. Revolutionary, however, is the way that blockchain is used by private companies, oftentimes smaller companies, by small businesses, et cetera, because for the first time ever, they're actually able to take on outside investors in a meaningful way, in a systematic way, in a way that's not fragmented and confusing, like Oscar, you were just describing with that slide. They are getting access to capital markets in a way that has never been possible before. And I can only imagine the growth and the innovation that that's actually going to generate, because they're also going to be free from the boogeyman of the quarterly earnings report, as I mentioned before. Obviously, they're still going to be accountable to their investors, but it's going to be much more on their terms and in their way, and by managing their community. So they're really the innovation that's going to be unlocked by that new paradigm of giving private businesses access to additional funds and additional liquidity. That is going to be something that transforms basically the global economy, is what I believe. And so we're going to probably have these parallel systems where you have the financial markets that are going to continue to operate in the way that they operate, the public financial markets, and then you're going to have this upswell of really like groundbreaking, revolutionary small businesses, medium-sized businesses that are doing things on their own terms. And these two forces are going to have to work together and figure out, what the new balance of that is. But I think we're going to see competitive markets in a way that we haven't seen before.
That's great. I like that. You try to balance both. Karan, which way are you going to go? Curious.
So I will start with the slide that you showed, Oscar. That is a very, very telling slide. And the one point I want to make there, because it's very pertinent, is that 99% of all the noise in the news media is all about the public markets. 99% of it, right? And this makes it especially challenging for people to even realize that there is a private marketplace out there. Private capital markets are there, right? And that makes it really challenging. Similarly, when it comes to on the technology side, all of the characteristics of a blockchain, why do we use it? We have many participants. They're all decoupled, right? You can't get them all on the same platform. Well, one of the ways you can get everyone, working on the same platform, on the same infrastructure, is to insist that they all be on one big, large, honking ERP system, right? And we know that it's never going to happen, right? No one company has nothing but one ERP. Forget the fact that an entire ecosystem is going to be on one ERP. Until blockchain came about, there was no alternative to that. And blockchain is the first cost-effective alternative that, from the smallest investor to the largest company, can utilize today in various shapes and forms, right? They can all be on that infrastructure. And everybody doesn't have to spend millions and millions of dollars and boatloads of money to implement a solution like an ERP solution, right? And that's where I say blockchain is going to be one of the most transformative and revolutionary things. I agree with you, Janet, that for a long time, for several years to come, the incumbents in the financial industry, they're incentivized to maintain the status quo and to be in control of that stuff. So there will be these parallel systems. But what I think will happen is that, given the fact that the private companies are 2 orders of magnitude more than the public companies, right? That's number one. Secondly, they almost 60 to 70% of all the GDP is generated by the private companies. As the secondary markets in this private market space start evolving and then becoming larger, there's going to be a tipping point. Mark my words, there's going to be a tipping point, and people will say, who cares about the public markets anymore? Many of the public companies are going private. There's been a trend towards privatization since the last 2 decades, right? That's not going away anyway, right? It's increasing now. So with all this, I can't imagine. I mean, one day I think some of these incumbents who don't know about all this stuff and don't make plans, they'll one day wake up and say, where are all our customers? Where are all our assets? What happened? Well, they are with the private capital markets, and that's very integrated system at that point, right? And I think the only transformative technology that can make this happen, it's not going to be ERP. It's not going to be the large, database systems. It's going to be the blockchain.
Well, I agree with both of you in this. There's no word about it in my mind. That it is very much like anything when there's a problem, how something can immediately have a meaningful impact. People in the front lines may not be able to see it immediately, and I think that's the one thing that's different. We're not sexy. Somebody said that what we do as companies in the private capital markets is not sexy as crypto. I get it, and sexy and not being sexy is fine. What we're here to do is be compliant, and but to be compliant, you need to understand the problem and to understand the inefficiencies, because people obviously know how to fix problems, and we're transacting, but we're transacting inefficiently. We're duplicating the records, the amount of times a company needs to duplicate itself to apply to the broker dealer, to the escrow provider, to the payment gateway, to the broker dealer, to the lawyer, to the auditor. I mean, and then of course the transfer agent.
That's the other part of the problem too, right? And
Yes.
you mentioned the word sexy. Agreed. Cryptocurrencies are very sexy, right? But this entire space won't evolve until people realize that cryptocurrencies are not the only financial instrument, right? There are many other financial instruments that need to be there. And that's the reason why, 99% of all the noise in blockchain itself is nothing but cryptocurrencies. Well, you're going to get off of that path.
No, I am with you 100%. It's just because of that, I think the audience at the beginning need to understand, you may not see it immediately, that the way you think you would. Where you're going to see today, as we tokenize private securities and companies compliantly, of course, the investor's not seeing it. They're still logging in the same traditional software and application. They see it. Where are they going to experience the true benefit? When they want to reinvest, and only then they're going to go, wow, how did that happen? How were they? Okay, it was really simple. Oh, I want to go to trading. How did they do that? That was I was used to doing all this paperwork. So only then, it's like chaos. We're having chaos right now. We need chaos. I know people are going, what are you talking about? I lost billing. I'm sorry, we need it. We sometimes need it as human beings. It's the way to remind ourselves that we're not perfect and we need to make things better. And so I see it this way. Real estate tokenization, I'm just going to talk to you a little bit about it. That's a perfect example. There's so much chatter about it. And I go, this is such an exciting sector that you're right. It can revolutionize, it can transform. But if it doesn't get started at the very first step, which is the governments who are the owners of the land titles, all the other stuff is a pipe dream. So if you're trying to sell me this side over here and this stuff hasn't started, yes, you need to sell them. And they're looking for serious participants. They're not looking for, the crypto, or they want a serious solution to solve the problem. Ownership, the city that I live in, something really interesting happened and blockchain could have prevented it. The homeowners were away out of the country for over 3 months. 3 months. I think it was 4.5 months. During that time, somebody sold their home.
Wow.
I know you're laughing. I'm not kidding you. You get it. Someone sold their home. And here's the most boggling thing of all. This happens more often than you think. And so how easy is it? Oh my goodness. Wow. It is easier than you think. So with blockchain, all of that could be prevented. Hey, it's Jeanette Spalding that's the owner. We need verification Jeanette's actually selling it. And all of that is because it's manual process. It's human beings. Well, we all know human beings where we can tend to go the other way. We don't, but there are those who do.
Right. Sorry, I meant to say, and to give you the other side of the story, you told about your hometown. I'll tell you about my hometown. In Tampa, Florida is the first city in the United States where a house was sold on an NFT. Think about that.
and here we go. And pretty soon they're going to take a picture of all of us. Okay, get ready for your NFT.
That's right.
Okay, I'm still okay. But all kidding aside, I mean, listen, it's been great having you both. I mean, look, it seems maybe it's rudimentary, but sometimes we need to go to the basics to remind people, because the journey of the private capital markets, when people look back, I want them to say, okay, what is it? Here it is. Learn about it. These are obviously, we didn't go into great detail in each part, but you got the gist of it, high level, you can dig in. But from here on, obviously, I'm leading everybody to the next one, which is our next topic, our next Core Chain webinar, which we're going to invite you, and hopefully you'll be able to attend, is blockchain in the private capital market, the impact. And as you heard from Jeanette, it's going to be transformative and to revolutionize it. But that's saying in the future, as Karan said it, and we're going to actually talk about the present. And this is the most important thing about our discussions in education. We're not going to give you theoretical, that there's enough of that already. We're going to talk about real life so you can see it. You might not be able to see it firsthand. When people say, I want to see the blockchain, and I go, really, you do? Do you know what it looks like? I know Jeanette's laughing because it is a question some people ask. But we want to open the unveiling of all of that as we carry on this journey at Core Chain of bringing blockchain education. We want you to feel that it in this particular use case that we're talking about, we're walking through it, and along the way, lots of different elements are going to come in, but the foundation is being set for you in order to have a basic and a core understanding, and you can see the opportunities that you can participate. The more information you have, the more you know about the private markets, the better everyone will be, because we're all going to move in the same way. So, Jeanette, thank you. It's always a pleasure. I'm so glad you were able to make it. Karan, as always, I'm glad you got the mic issue fixed. For everyone, thank you for joining us this afternoon. We look forward to seeing you again very soon. We're going to have some great conversations on our next Core Chain webinar series on blockchain. Have a great day.